now on the 8th session of the day, and our next session is a panel discussion on fighting data and payment fraud using artificial intelligence and machine learning. Now, generally, frauds are being detected post facto. With the use of data sciences, artificial intelligence, and machine learning, more efforts are being required to work towards developing preventive fraud mechanism. To discuss these challenges, we are joined by Mr. Kartik Shinde, partner at Ernst & Young. Mr. Kartik will also moderate this session. Welcome to the panel, Kartik. And our next guest on this panel is Mr. Sridhara Sidhu, Senior Vice President and Head of Information Security Service Group at Wells Fargo. Welcome to the discussion, Mr. Sidhu.
Thank you.
And joining them on the panel is Mr. Ahuja, Chief Technology Officer and Chief Information Security Officer, Inspira Enterprise. Welcome to the discussion, Mr. Ahuja.
Hello.
And completing the panel is Mr. Anuj Bhansali, Head of Trust and Safety, PhonePe. Welcome to the session, Mr. Bhansali.
Thank you.
You're welcome. And with that, I will hand over the session to our moderator, Mr. Kartik Shinde. Over to you, Kartik.
Hi. Yes, you are sorry, it's a bad connection at my end, but I hope things don't drop off after this. So hi, everyone. Sorry, you were saying something, or can we start?
The panel is now.
All right. Thank you very much. Welcome, Sidhu, Om, Anuj. Very happy to have you on this panel. While the topic is fighting data and payment frauds using AI ML, we all know and we've seen instances. Some of us work in banks, some of us have worked in banks before, in payment systems and implemented solutions as well. And while we all have heard, seen, experienced frauds in some form or the other, I think given the advent of digital disruption and e-commerce boom, I think this is one area which is really going to see a rise in the frauds as well. And with the advancements in which the frauds happen, so detection, prevention is of utmost importance, right? So that's the topic that we are going to discuss today, and more than happy to kind of listen to your views in terms of where have you seen instances and what are your thoughts, etc. On this area, which obviously would benefit all the audiences as well, right? So I'll in no particular order, I'll kind of kick off with a quick question of sorts in terms of what's really your point of view when we say frauds, and the mechanisms present today. Do you think we are sufficiently there? Do you think the fraud management systems or the anti-fraud mechanisms that we built into processes or technical implementations, are they effective enough, or do you see a chance of improvement? Obviously, there is always a room for improvement. But what is your point of view on today's situation? And
right.
and Sidhu, sorry, go ahead, Sidhu. Thank
Sure.
you.
Yeah. So maybe if I could probably check, right? So Kartik, payments have been there since probably last 3-4 generations in banking system. Obviously, there are different payment mechanisms for different customers, whether it is retail customers or mid-market or merchants. And there are different models evolved over the period of last 20, 30, 40 years in looking at what could be potential fraud models for a given payment mechanism or channel per se. The ACH to SWIFT to point of sale to a card not present to online digital wallet. All these are different models of payments, obviously different channels, and the risks are obviously very different, and the frauds tend to be significantly different, right? So there is no one model that fits everybody. Each one, depending on the geography and the channels that you operate in, they are also evolving. We heard probably 3-4 years ago a significant cross-border payment related running into hundreds of millions of dollar payment transactions which gone haywire. That's a different one. We are hearing so many, synthetic identity frauds that are looking at. We are looking at online wallet-centric frauds. Are we sufficiently able to detect and prevent? Detection is okay in certain functions because some of them are relatively established. Some of the new ways of payments, even detection is also becoming difficult. And the time within which these transactions happening and the volume and the ticket value of each of those transactions, that also add to the problem of our ability to detect and prevent. So those are my initial thoughts, and we can definitely talk about where are the pain points in the new digital disruption area. But let me allow probably my friends Anuj and Om cover a few initial thoughts from their side.
Sure. Anuj, Om?
So, Kartik, as you pointed out, and she also contributed around on that if you look at it, the Indian economy has changed drastically from around, if I were to talk about 5 years back, there was no UPI while NPCI did exist, right? And today it is processing 2.2 billion transactions a month. The scale at which we are operating is immense. With COVID, with these growing digital technologies, you are seeing a lot of first time or even your parents coming digital, and they are the ones who are used to going to a bank to encash. Today you are transferring values of a lakh to 10 lakhs without even stepping out of your home. The other advantage or the disadvantage which has happened because of this is everything is instantaneous, right? Earlier what could take a 3-day process and you had enough time to, let's say, intercept and pause a check fraud or any of that. Today, all of that is happening in real time. The amount of money being moved is immense. The characteristics that you have for a profile is very, very limited. You do not have an entire profile, right? The interoperability of systems, be it a wallet, be it a UPI or an NPCI, right? It is becoming just a digital transaction in its nature. Frauds have also evolved over there. So they're like, anecdotally, what I have seen across the frauds have modified in a lot of ways, from where it started as an authorized push payment frauds, right? Where it is convincing a customer to a social engineering attack and saying that authorize this payment and you would receive some credit or something. Today too, it has been moving to a digital savvy where I'm seeing fraudsters employing things like Google ads or YouTube ads or even other advertisement where you are seeing fake websites coming up, and the moment you click on it, you're landing on your payments apps and you're making a payment. Now these are very small value. It's not going to be 20,000 rupees or it's not going to be a 10 lakh rupees of transaction, but it's just a very, very high volume of frauds that are originating. So fraud, for me, the way I see it, at least in digital world, it's always a cat and mouse game, right? It's we evolve, so do they, and that effort is becoming significantly harder. Primarily, it's a mobile number, the devices, the availability, the network, the reach that has increased manifold. So a lot of variables have changed from what used to be earlier. A couple of key points that Anuj is in a particular region, this is what he looks like, versus today he could be anywhere. I could be in Singapore transacting over in India. So those things are varied a lot. And that is where your traditional rule systems actually start failing. While rules easy to explain, the amount of variables that you need to process, the variables that you need to understand, that is somewhere that we are moving towards more and more of machine learning to predict the user behavior and entity behavior and try to action upon this.
I think just adding on to Anuj and Sidhu's comments, with the changing dynamics like COVID coming in, your usual checks and balances are not operating. The volume of transaction has, on digital side has multiplied by 5 to 6 times. Probably Anuj can validate those figures. And the people who are validating those transactions, the analytical power is nowhere coming and looking that, because your models were that, this analytical fraud detection units were centralized in one location. And now suddenly they are not able to reach their location. People have been able to exploit all these things. And we have seen this relative COVID-19 exploitations of transactions, both on the traditional and digital payments multiplying. As per my rough estimates, what numbers we had from RBI in the last quarter of 2019 was approximately $17 million of frauds which were there. Now, if I multiply it by 4 times because the volumes have increased and quantified over the year, it should hit somewhere around $200 to $250 million of fraud money only on online digital debit and credit card and phone payment transaction related issues.
Right, absolutely. Sidhu, you mentioned about synthetic frauds, and it's a growing concern. It's more a form of identity theft in that sense. But could you give us some more insights onto a particular case or case in point example which you might have encountered?
Yeah, absolutely, Kartik. And this is actually showing up a lot post-COVID. Before we get into the actual cases where this happened, let me just give some background. Obviously, most people know synthetic ID fraud is basically creating an identity using some genuine information, layering that with the fictitious or false information, create an ID and create accounts, perform transactions, create credit history before that account get busted. And that kind of what we call as the synthetic ID fraud, potentially a major part used to be in 2 segments of fraud, which is either the drug money laundering, those kind of areas where it is also difficult to pinpoint a victim. Unlike your digital payment fraud that is happening, it's basically immediately getting debited from one account, which is not supposed to be. It's really easy to detect, whereas synthetic ID fraud is extremely difficult. So I'll give a couple of examples. Some of us definitely know one of the largest global security firms, not technology information security, but one of the French global security firms, the CEO was a victim of synthetic ID fraud, and somebody took a mortgage by creating a synthetic ID using. So the CEO of a global company. Second is, if you look at the entire probably European, even Asian, or for that matter, US, significant synthetic fraud is happening on an average, maybe around 10 to 12 billion only in the US. The recent interesting things I could tell is, I'm sure you heard, most of the governments post-pandemic, what they're trying to do is how can they help the mid-market entrepreneurs to say that they can run their business, at the same time be able to pay the salaries to the employees they engage with. In the US, what we have is the paycheck protection program. Say, for example, I'm running a restaurant for people. So I can create their profiles to get what is required as a kind of assistance from the government. So in this process, people created synthetic IDs without having who those employees, they were not on the payroll ever. And they created synthetic IDs, took government money. And one of the large things that we know is, probably many people have seen this, one of the very well-known India-based technical savvy person actually created synthetic IDs and actually took money from the United States government. Now, the problem there is, unlike the other modes of identity fraud, the synthetic ID fraud is extremely difficult to detect. The fundamental reason is there is no consistent definition across any bank. If you don't have a consistent definition, capturing that fraud is very different. For that transaction, the metadata you're capturing is different. Then you can't even run models like artificial intelligence, machine learning. So it's top to bottom, everything is failing. And I think the only thing that people can do, particularly in banks, is collectively work with regulators to have a consistent definition what synthetic fraud is. And maybe 2 years down the line, we can have AI models to manage that. Otherwise, synthetic ID fraud is extremely difficult to detect. Forget about cross-border and then holding people to account. That's a far further case. So let me stop here.
True. No, that's very insightful, Sidhu. Thanks for that. Let me turn the tables to Anuj. Anuj, while you mentioned about, and obviously UPI has taken off really well in India, And I see a lot of other countries and nations actually adapting to a similar sort of an instant payment network. And while you've been a key member at, a wallet company, right? What would be, your recommendations for the, larger fintech ecosystem, where, or if you could just share some insights into, from a security perspective, uh, whether it is frauds, whether it is, specific cases that people would want to take care of, and mechanisms. I don't know, a longish question, but in a sense, your insights on, for the general fintech population out there.
Sure. See, the way we have seen it compromise is not in a traditional sense, right? And at least in the market, what we study around, it is an essence of a people plus a technology combination. What we are seeing is even frauds are moving to a fraud as a service, right? So we had software as a service, platform as a service. Now we are seeing frauds as a service. And that is where the fraudsters are collaborating much, much better than probably all of us together out. They are willing to share information. They basically figure out the logic failure at different points. So earlier it was about missing out some security check or some kind of an identity verification. Now with everything mobile led, it is about a phone number. That is your identity at the end of the day, right? It's a completely digital world. What we see is they try to misuse that as an instrument. B is it's also a business logic compromise or a business process. So it is no longer about hacking into a server. Of course, those kind of security vulnerabilities, a lot of companies do put in processes for that. It is about figuring out what all processes lack, right? Those fraudsters are the first one to realize that I can misuse this particular process in this kind of an environment, and this is how I can take advantage of it. Right? So one example I would like to give, right? COVID, right? A natural calamity. The fraud started increasing. How so? Two things happened. One is RBI announced a very good scheme that let's pause your or a moratorium period. In that, these fraudsters started calling up customers saying that we are calling from your bank and you need to authorize a particular payment. Once you do that, your moratorium will get applied, and hence you do not need to pay any interest. A lot of people did fall for it. And it is not to do with education, while education of customers is definitely important, right? Do not share your CVV, do not share your card details. I think that's been going out in the industry for quite some time, been more than a decade or so. People still fall for some of these frauds. And that is where, intelligent algorithms start coming in to figure out what is the behavior. Why is that this person at an 8 p.m. is adding a new card with an account activity which is less than a month old and trying to do a 10,000 or a 1 lakh transaction? Why is somebody trying to pay an electricity bill of, let's say, a 90,000? Because these are all anomalies, right? And that is where you try to figure out human nature or just an analytics team trying to figure that out. While it works, at the end of the day, the kind of business use cases that keep coming up, right? That is something which gets more and more complicated. And that is where your machine learning actually starts kicking in. The second example that we saw, right, was, again, it's a funny thing, right? At the end of the day, COVID was government supposed to help us. And fraudsters was the one where they started creating multiple BPAs, right? It's a COVID care. It's a COVID relief. It is something at the rate. Now, plain English language, right? At the end of the day, while that, yes, that is a trend that you see across. But in real time, when it is getting created, you try to monitor the activity. What could be the sense of it? Is it trying to impersonate a person? Somebody will try to impersonate an entity itself. That is where a lot of this intelligence goes in, wherein it looks into like some kind of cohorting here. So we created models which will do cohorts where we see if a particular keyword is getting created by multiple users. So while an Anuj as a name might be common, but if let's say 100 people start creating a VPA within a 2-day or a 3-day window, we basically start flagging that off. Either we shut that down, we send it for an investigation. But this is where the true power of machine learning also comes in and helps us out to prevent customers from falling for it. Because a customer might just end up paying for it. At the end of the day, your platforms get misused. That is where you are there in this business to keep people safe. For me, that is the interesting game, right? Trying to predict out what can go wrong next. Effectively, while people look into how can we grow businesses, or else it is the other way around. Let the business grow, but let it not suffer around because of frauds. So yeah, so that is somewhere on the company side. What I would suggest effectively is two things. Definitely look at processes when and as you keep launching new products, new features. Do look for gaps, because a lot of time we will launch products which will have human assistance involved. So there will be gaps around in those that needs to get plugged in. We start thinking like a fraudster. Don't think like, hey, nobody will think about these kind of edge use cases. Why should we worry about it? It is you who needs to worry about it, because somebody else will actually figure that out. It will spread out and it will cause massive damage.
Thanks, Anuj. I think on that point, where you mentioned about the different UPI handles that were being misused in the context. What did you as a business? I'm very intrigued, and that's the reason why I'm asking you this question. Did you implement any fraud detection tools, or is that in the process? Because I know this is a relatively new area where we have technical frauds vis-a-vis things which Sidhu also mentioned, synthetic frauds, more on the manual side, difficult to detect. Is there a midway somewhere between? And then this question is open to everyone. But Anuj, to you, did you implement it?
Yeah, so I have been lucky in terms of the team I have. So we have really good engineering, analytics, and operations team who are the first ones to detect it, right? The quick part is our team basically whipped out, we tested out quite a few models. So it started with certain rule functions where we blocked some of these VPAs being created. We quickly moved to algorithms where we could detect any of these VPAs being formulated, generate a risk score. That risk score, again, we used in real time with our fraud engine to predict, let's say, might be a VPS created, but it is not active. But this VPS, let's say, creating requests of hundreds, or there are hundreds of people trying to transfer funds. We would immediately block that in real time. We would then look into even as a manual investigation, verify it, terminate those accounts. So that has helped us a lot. So using our algorithms on user risk, on VPA risk, on card risk models, we actively daily, our algorithms itself basically terminate a lot of accounts in thousands on a daily basis. So definitely we do use a lot of it, but it's still early stages, right? So technology, and as Om was also talking about, that the scale of the technology, that is the, if you were to what you were doing, let's say a year back versus now, you are processing millions and millions of events in a day, and all of that processing in real time is of course comes at a cost. So that is where we are also moving towards more towards real time.
Absolutely. Thanks, Anuj. That was quite insightful. Om, just coming to you, on the solution side, what kind of solutions have you seen in the market? You're on the other side of the table, like myself, and what's your view on the solution side? Do you think there is a gap that needs to be filled? And what are the different types of solutions clients are having today?
Yeah, very rightly said, Kartik. And I think I also agree with Anuj in terms of how massive abuse was carried out initially, especially on the PM care funds and all those things. What I understand is with the traditional banking customers with whom we have worked in, cybersecurity, compliance, fraud, and operations are all treated disparately. And when you are looking at fraud, you need to have all these functions evaluating and coming together on a what you call a single source of truth or data, or one kind of a common analytical and workflow platform where you can look at transaction frauds, account takeovers, as mentioned, the new handles being created, money laundering. If you have a proper definitions that a new account or new handle is created for initial first 10 days, what is the value of amount of money that can be transferred? And when Sidhu also expanded in terms of synthetic identities for sanction abuse, insider trading. So all these things, when we look at, they are all dependent on all the processes of know your customer, client onboarding, user registration. These are all mechanisms in terms of where you need validation, the processes, and advantage of having all these things in one platform or one workflow is whenever the situation changes, as Anuj said, you had a team to quickly tweak the processes and delve into new areas, new analytical insights, which the data in hand provides you, and you can provide response accordingly. So these are some of the things where the whole financial, what I may term that financial crime operations unit or financial crime operations workflows are to be tightly integrated across all digital transactions and channels.
Thanks.
Kartik, if I can add to what Om is saying here, is a very, very thoughtful statement, right? There is definitely an element of siloed approach, at least in certain aspects of the entire life cycle. Technology and probably digital channels are more collaborating than probably a couple of years ago. But as Om mentioned, there is an opportunity for a real-time collaboration between financial crimes and fraud, because these large organizations are two different functions, right? So there is an absolute opportunity with complete digital transactions happening. There is a need for cohesive working, much like a security event incident response, right? Yeah. Fraud response potentially need to be very collaboratively thought through, and it's a journey. I think it just started.
No, yeah, because on the cyber side, I can say, on which new browsers the transactions are happening, where the person is located, what is the flow, and we are dependent on the primary applications to give certain digital identities to analyze. But then you have different fraud models, and then these fraud models are to be applied real time on the same stream of data. So this will really help. We will reach there. Tons of data to play around, and that is where I think AI and ML will play a role, where different set of analysts will view same set of data, but from their objective in terms of what they are evaluating within the same transaction lifecycle.
Right. No, absolutely valid points. The one other question that came up while we were just discussing is while we have the traditional frauds, right from check frauds to letter of credit frauds to the traditional ways of insider frauds, do you think now with the whole cyber security, as we call it nowadays, not information security, but cyber component getting added, and Sidhu, as you mentioned about some of the recent SWIFT breaches that happened, not just in the one started with Bangladesh Bank, but then, we saw it globally happening. Do you think the lines are blurring? Because I investigated a couple of those, and what I really felt was the lines between traditional fraud and the new age frauds are diminishing, and now you can become an insider and start doing transactions sitting somewhere, other part of the globe, and kind of do it. Although we discussed some of these mechanisms, but I just wanted to bounce this thought across with you guys.
Sure, Kartik. I know, as you rightly mentioned, you have done the investigation on a couple of them yourself. I'm sure you would agree with the general understanding that it is less to do with technology and more to do with the process gaps and the roles and responsibilities. See, at the end of the day, it is mostly hygiene, right? Unfortunately, mostly abused word called hygiene has so much value in it. Many a time we are looking potentially, particularly in whether it is cyber field or any other digital areas, more and more investment is happening with less thinking on, in the interest of quick go-to-market, the tools, and without thinking through the underlying process flow, the process definitions, governance, roles, and responsibility. That's where it is. And if that wasn't the case, if it was a technical issue, then whatever the observations we had on that particular payment systems or platforms would be continuously happening everywhere, which is not the case. So fundamentally, what is the unified way of looking at the process? Who are the stakeholders, the playbooks, and working through? That's number one. And as probably Om and Anuj mentioned, the pace of the digital retail payments is extremely cumbersome. And the volume, the speed, there is no other way other than looking at every possible metadata around the transaction, right? Forget about one is current customer onboarding, that's definitely true. But the second is every transaction, whatever be the metadata that you can capture, device, Om mentioned a lot many things. Unless we have a comprehensive, continued view of the metadata and refining the models to alert and predict, right? This will become definitely unmanageable. And the ongoing COVID is only adding to that problem. I can only empathize with Anuj and his team, while he has got a great team, how cumbersome and stressful these days have been in identifying and tagging those things, which is I can only imagine.
So one more thing I need to add, apart from that, the traditional form of frauds. Suddenly after March, if you have ordered a checkbook and you are waiting for your checkbook, they are not getting delivered for 1.5 or 2 months. So I really need an insight on how many checkbook frauds in terms of funds being siphoned off from the undelivered checkbooks, or someone attempting to those parts which may get revealed is something will be an interesting ask coming in through, because you never know. These are the traditional models in which frauds have happened. Banks were on, but then if we had a good system where before the COVID, whatever new checkbooks you have printed, you just suddenly disable those checks within the system, you could have saved those frauds. So dynamic decision making, the impact has to be evaluated. We still require this kind of fraud research to be done to come out with numbers. But these are, like, if I'm thinking as a fraudster, these are the most easiest models to hack into, because the postmans are not working, their godowns are locked, the mails are not being delivered, and then some few checkbooks here and there going missing, and then you picking out those accounts. It will be too late for you to even go out and complain that you had a fraudulent check, because no one is listening to your complaints.
Right.
Another angle to what frauds can have.
On the cybersecurity, right? Effectively, yes, the lines are blurred, right? And the primary reason for that is, for a fraudster, it is the usage of technology. At the end of the day, they are only looking at one metric, right? We as businesses will have multiple metrics. It's the money in the bank account that they are looking after. And what used to be disconnected earlier, right? What used to be, let's say, an InfoSec policy, today that becomes because it is a digital age. Everybody wants to be seamlessly connected. Nobody wants to say that, hey, after opening an account, I want to wait for 2 days before I start transacting, right? So a lot of these things have happened. And then you have, like, at least in every home, you will find at least 5 to 6 different devices. You have like 2 laptops, you have 6 mobile phones, a tablet. And then as a customer profile, you're looking at, okay, this guy logged into a Firefox on an Apple versus then, let's say, on a Android phone, and then he did a transaction on an iOS. So of course, yes, things become complicated. And earlier, what you were discounting, right? Now those things become very, very valuable. In terms of cybersecurity, now you're looking at, if a fraudster has to, so you might have a system which says, okay, log in only from a couple of devices. You are starting to relax because things are going digital. But then a fraudster realizes and says, okay, I will use a Selenium browser. I will automate this part of the script. How many users will actually go ahead and do that? It's an anomaly behavior, right? It's a 0.000x percentage of the overall traffic. So I do believe that, right, the boundary lines are blurring out. The end goal is still the same for them. For us, it becomes much more complicated because the amount of systems that come into play, the amount of both consumer systems as well as the tech systems on individual company levels, right? To get this data together, try to understand, make sense of it, and then try to figure out an anomaly pattern. Because that is where it is leading to a downfall across in one of the bricks, and that is what causes the overall downfall.
So very true. So very true, Anuj. And I'd like to just highlight the point, Sidhu, you mentioned around the processes and the hygiene. Well, that's for sure, that's there. and in most cases, some of the banks where we did the investigation, you're right, the process breaks were there. They were definitely, some of them were mature, some of them were not mature banks. But my point really was, could we have avoided some of those, with some of the very basic, I'm not even saying, implement AI ML related models, but really, things like monitoring the logs with anomalies related to, like creation of an account, right? Or activation of a disabled account back into the system, and that being used to, generate some transactions. So, some of those basic things, while process hygiene is
absolutely. Absolutely. And there is never, I don't think there was never ever a greater importance than post-March this year in looking at those things. First and foremost, obviously, everybody knows is a privileged access and privileged account monitoring. That's becoming extremely critical than otherwise maybe last year. Second, with everything that is going on in the economy, there is a stress in organizations becoming efficient, lean, leading to letting people go. That adds to its own layer of additional insider threat problems. And third, we all know the example, plain and simple, one of the South African banks, just two people. What they did, they went into the backend system, increased the credit limit of those people, and cloned those cards, went into 7-Eleven in Japan, like this Ocean's 11-13 story, right? They within no time, they took $11 million and walked out of Japan, right? And the amount of time it requires to do everything is so expensive, the bank had to write off because of the number of transactions and how they did it. So insider is never been more, risky, in the current circumstances. And I think whether it is any digital transaction processing platforms or financial services companies or any other company, monitoring those privileged accesses and detecting and most importantly, preventing those things happening is extremely critical. Otherwise, it becomes extremely difficult to manage also. And it is actually showing up. I mean, we can see in the last 6 months, the amount of financial frauds in the last 6 months has already crossed last year's, entire US. So, those are the things that people organizations definitely need to do.
Yeah. And to that point, and I was always, itching to ask this question to industry, practitioners in that sense is, today, if you see, we have fraud management systems. And on the other hand, we have, cybersecurity platforms, tools, analytics, all of the lot, right? And when I say the lines are blurring, the disconnect between the traditional forms of monitoring frauds and traditional forms of monitoring cyber attacks are operating in silos, right? Do you all see a convergence somewhere here as well? Where your, say, hypothetical example again, your SIM solutions are really talking to your fraud management or anti-fraud systems, right, and mechanisms, and really giving you an overall view of what's really going wrong, and whether a cyber attack is indeed, perpetrating into a financial fraud of sorts. So just thought I'll bounce off this question.
Yeah. So that is definitely, as in my opening remarks, right? Different channels for different, end users and differently. So particularly in the digital channel field, and particularly in the retail side of the house, I'm sure financial institutions are, merging together to a large extent the security incident response to a digital channel transactions. That is to a reasonable extent happening, right? What probably is not happening that well is on the cross-border payments real-time side, or maybe on the lending side of the world, particularly digital lending, because it is going significantly high these days. How I don't know how real time this is happening is anyone's guess, but there is absolute opportunity on the lending side in addition to actually just the payment side. But I'm sure every bank that I interact with, people, friends I have, many people are really good in looking at the digital side of the payments to the security events that are happening. That's for sure is happening. Is it effective? Yeah, it's debatable.
So just like to add on Sidhu's comment, we always are obsessed with red teaming, blue teaming, purple teaming. Why don't we have the fraud analytics teaming coming in where different teams, simulate the frauds, and then you have new rules, new scenarios being created, and then you look at all the channels so that the definitions and the understanding or the outcome of what data needs to be evaluated and seen across all these channels are very clear within the decision-making team. I think if these kind of exercises are conducted regularly, like we do DR drills and all that, this will really help, enhance each bank's or each financial fintech company's core business part. There'll be more collaborations because you have different vendors looking and providing you services on different channels. So it can be a very good exercise to conduct, and you have more ideas and more collaborations coming in. So it has to be done maybe at different levels across the associations within the large banks, or maybe within fintech for their own fintech piece. You have a lot of collaborative channel payments or cross sections of transactions happening. This will really enhance the knowledge and the learnings can be shared.
No, that's a fantastic point. Sorry, Sidhu, you were saying something.
Yeah, so I was about to say that in certain digital products that global financial institutions are building, in the design of the product itself, there is an element because everything is digital. The product is completely digital. So they know when the product anybody is going to design the product, they know that everything is digital. Importance of cyber, is also baked into that. That's how the pricing, the risk, and the insurance around the product operations is covered. But operation side is something that is definitely a gap that need to be monitored. But I think more or less at the product design side, to some extent, that work is going on.
Yeah. No, I think the point that Om mentioned about the fraud analytics teaming, or the as similar to a red teaming and blue teaming, I think that makes a lot of sense, because how else are you really going to evolve the models for AI ML to really start learning about what things can go wrong and what needs to be detected and learned on the go. Nothing like a simulation of sorts which a team would do, cooking up fraudulent scenarios and then taking it through a simulation of sorts, right? And Anuj here is something.
Yeah, so as I said, lucky to have a great team, right? So the trust, safety, security, right? So the application security team is also an outside-in approach. The way we look at it is not about a runtime application security. It is about how would somebody misuse an account. So the attack vectors, right, is from both a process, a data perspective, and application security perspective. So we look into, to give you an example, right? So in India, we saw a rise in remote sharing apps, right? Where in any desk or a team viewer gets installed on your phones and the fraudsters take control over your phone. Typically, it is a cybersecurity or a runtime application security versus a fraud risk, right? We merged both of them, where we started figuring out if there is a tampering over there, if there's a detection which does not look like a human, the signal gets passed to a fraud engine. The fraud engine evaluates in real time and starts blocking those transactions out. So that is something that even from an API perspective, right? So normally a rate limiting, etc. These are typically parts of your InfoSec or your cybersecurity. We have integrated that along with our core engineering systems, core fraud engines, where it is evaluating if there's a particular IP, if there's a particular device, if there is a particular user which is trying to do or bypass a rate limiting, we will start blocking those accounts. So, and it doesn't mean that it gets stopped only at a network layer. The internal activities across different systems will get stopped. So it is not just that you will change your IP and you will continue behaving on that, or if you're already logged in, you will continue, you will just get logged out. So those are some of the applications we have tried to take a holistic approach. And lucky enough, because we have enough bandwidth to experiment around on all of this, most of our systems are actually built in-house. So we have been able to integrate almost all of them together. So definitely it's a very, very plus point, because the idea was not to have just an application security as a separate, which is just doing a checkbox approach, but to look towards internally, how would somebody misuse a particular API, a particular account, or even a particular vulnerability. It was not about, have I cleared the OWASP top 10? Yes, you might have done, but there's a business logic failure, right? There's a privilege escalation somewhere, and this is how somebody will misuse this particular account. So how do you account that? Now the anomaly detection of that works on the fraud side of things, which is monitoring each of these entities. If let's say something comes from here, both of them get married together and we start blocking these accounts.
So that's why I say it's not financial services versus FinTech, it is coexistence.
Yeah.
Absolutely. So Anuj, I don't know how much time we've left, but that's an interesting point you made. So does the wallet app really trigger a presence of a TeamViewer or a third-party utility, and that's how you trigger?
Yes. So we built certain algorithms which we are trying to on the edge compute. So we did not want, we are very careful on the data side of things. So we try to look into the behavior patterns, right? And these are normal behavior patterns. How does the touch sensor react? How is it acting upon? Is there a view layer which is on top of it? Right? Based on these signals, again, it's a passive intelligence, right? It is not trying to come on your face as a customer and trying to block you out. It is about passing those signals back. If I detect a risk, right? All of a sudden, this was an account which normally does 1,000 rupees transaction. Somewhere this account got active after a month. There is probably a risk signal on the device risk, and there's a 20,000 rupees transaction which is getting originated. That passes together to combine the overall risk score and maybe block that transaction out.
That's very interesting. Thanks for those insights, Anuj. Thank you very much. All right, I would just like to check with the moderator if we have time left, because...
Yeah, hi, can you hear me, Mr. Kartik?
Yes.
Yes, sir. So unfortunately, we have run out of time, but this has been a very interesting conversation, and we have on to the next session now. So thank you everyone for being with us here today, and thank you for taking time out of your busy schedules.